A few weeks ago, you mentioned that banks in the US have these massive leveraged treasury portfolios. What is going on there, and what can go wrong when a bank has that much leverage?
Yeah, so when a bank brings in deposits, they can either loan that money out over longer term periods, for a 3 year period, 5 year period to an individual or a company or what have you. That's a part of their asset portfolio. But they also create these huge portfolios of securities, generally mortgage backed securities and a lot of treasuries. And so, the benefit that banks have is they don't have to realize losses in real time. Like if you have a stock portfolio, you can log in and see on a daily basis, oh, I'm up today or oh, I'm down today. And you're getting
Hmm.
quote unquote mark to market. It's reflecting the current value and you realize that. Banks can kind of pretend that that doesn't exist. So as rates have been coming up, they've got these massive treasury portfolios that are bleeding. And they only have to realize the losses in real time when depositors start saying, give me my money back. Really interesting juncture here because banks are still not paying much in terms of an interest rate on deposits. Meanwhile, you can go to the treasury market and get 4%. So it's 0.5% here, it's 4% there. They've got losses on their treasury portfolio because rates have come up and the value of their bonds have gone down. And now you've got consumers, the savvy ones, who are like, why would I sit over here with 0.5% when I can go over here and get 3.5 to 4? As they exit, then you begin to realize the losses and the pressure begins to emerge in banking. Fascinating last week. The whole scenario that I just described blew up the pension market in the UK. And it required the Bank of England to step in and intervene because they've got these treasury portfolios, right? But they're using leverage to enhance returns, not unlike bank balance sheet leverage of as much as 10 to 1 or 12 to 1 leverage. In the case of pension funds, 1 to 1 leverage, very common, up to 7 to 1, 7 times leverage on their portfolios. Huge margin calls because they do have to mark to market and required an intervention. We're that close to the same thing happening to U.S. pensions this week.